I am coming to you today from the Never a Dull Moment department. Zuck versus Musk is back on. The PPI came in surprisingly hot, and the market is grouchy. The analysts had time to think about yesterday, and they do think that the bond auction flop and more negative talk from San Francisco Fed President Mary Daly were the cause of the late sell-off yesterday. And yeah, that's I can go along with that. And we have consumer sentiment coming out later today. Hi, this is Randy Kirk. And if you like what we do here early in the morning, every single day, please hit like, hit subscribe, and notify. We are now only 24 hours away or so from the big Larry Goldberg interview, which will be shocking. It will be surprising. It will be amazing. It'll be useful. Anyway, that's tomorrow morning, Friday. So please hit notify if you want to be sure to be reminded of that. And then, of course, Patreon is looking for more activity, and you get a free book, a free audiobook when you join. All right, let's take a look here. So if you didn't watch yesterday afternoon's special show, we talked about four things, and I'm going to add a fifth that might have affected the market sell-off yesterday. Number one, the auction for the 30-year bonds did not go well, even though that was expected, and that 10-year jumped up as a result of that. In fact, everything has jumped up as a result of that. You see, what is happening is we're drying up the amount of funds available for the bond market. I mean, there's just not enough folks that are interested in the bond market, if you will. Way too much supply and not enough demand. Easy way to say it. And what is the implications for that long term? Because the Treasury is going to have to continuously add more of these bonds to the market. So this is, I think, a little bit of a fear out there. Number two, the deficit for July was higher than expected by a lot. It was double what it was last year in July, and year to date, 1.6 trillion. That was bigger than anybody was expecting, and that would mean that we need to borrow more. So same thing. Number three, initial jobless claims were higher than expected, not by much. And, on a normal day, it wouldn't have affected the market. But the market right now is looking for evidence that the economy is still strong, and that was not what they were looking for. Now, again, soft landing, sure, it was fine, and by itself would not have caused any problems. And then number four, the oil price is breaking out of a trading zone and potentially going up to 90, causing future inflation effects. That wasn't good either. And then someone in the comments mentioned, and then this morning this being talked about even more, is that when Mary, the San Francisco Fed president, Mary Daly comes out and says, well, she's a hawk anyway. Everybody knows she's a hawk. She comes out. She did not give any comfort. Now, she wasn't hawkish, but she also did not give any comfort at all. She didn't say, wow, those were good CPI numbers yesterday, so therefore we can all rejoice. No, she said, I don't know, we're still waiting. So anyway, my thinking about yesterday was also that the market was way too jubilant in the morning, so then it gave back some of those gains. Well, now the market is not jubilant at all. We'll talk about that in a minute. So the PPI was expected to come in at 0.2, previous at 0.1 last month, but unfortunately it came in at 0.3. The final demand came in year over year, much higher, well, slightly higher than expected. All in all, the PPI print was not good. And also the prior month was adjusted fairly substantially again. I'm not liking all these substantial adjustments over prior months. So anyway, the PPI, while higher than expected, was not high enough to cause anybody to be terribly worried about the CPI in the future. I did a deep dive yesterday in whether there's correlation between PPI and CPI. Apparently, lots and lots of people have studied this. And shockingly, there is not very much correlation. The problem is that a lot of what happens in the PPI is not the same as what is in the CPI. The basket of goods is not the same. The way that they look at services is not the same. A lot of stuff is different. So, and the PPI, I think, is a lot more current. It's like more not as backward looking. So all in all, this PPI report was not good. But if you look at it economically, it wasn't that bad. So we'll see what happens over time. I think today the market is probably not going to get over its grouchiness without some kind of news. And then let's look at oil for a minute. Remember, this is an international commodity, so the daily fluctuation is affected by changes in the value of the dollar. The dollar goes up, then the price of oil goes down, and vice versa. Then we've got OPEC. Now, OPEC seemed to be a nothing burger again, right? But unfortunately, this administration has not been pushing drill, baby, drill. And so the result is that OPEC has power again. And now they call it OPEC plus. That includes Russia and Venezuela. All of a sudden you've got these countries, they have power again. And so what they're doing is they're using that power, and they've cut supply. Well, we cut supply and you don't have any place to make it up. Well, this particular president has been making it up by selling from our strategic reserve. Well, now the strategic reserve has been sold off. It's kind of hard to see that that's going to have a great effect going forward. Nobody's going to believe that we're going to deplete it to nothing. So in short of getting back into a positive approach with regard to domestic production, getting the U.S. back into energy self-sufficiency, OPEC's going to be able to use this power, and they are using that power. And then on top of that, the Saudis are now saying, well, we want it even higher. And the Saudis are cutting their production even more than OPEC. And the Russians are also cutting their production even more than OPEC. Well, then the POTUS, the president of the United States, could be on the phone yelling at the Saudis. I don't think he is. I don't see any evidence that he's putting any pressure on the Saudis. That should be headline pressure. That should be, something that the president is saying out loud for everybody to hear. It's not happening. He's not going to have any ability to pressure Russia at this point, but he should be able to pressure the Saudis. So then we've got the additional problem of China, and China is a huge importer of oil because they don't have their own resources. Their economy is now in serious trouble, and everybody's looking at China, wondering what's going to happen with China. People are saying, well, they'll probably do a stimulus and try to get the economy going again. But right now, people are looking at China and saying their numbers are down, and so that would be a help to relax the market. But overall, right now, the OPEC is in the driver's seat, and they are raising the price. Will it go to 90? Will it go above 90? Some people are looking at 100 early next year. Hope not, because that would definitely flow through the economy and create problems. Now, the rest of the commodities are fine, down, not gold, silver, copper, just go down the list. All the commodities are really looking good in terms of how they affect the economy and inflation numbers. Anyway, final story on the oil is that we have very, very, very warm water in the Atlantic and the Caribbean. So that would indicate we could have more hurricanes. However, this heat dome that has been over the Southwest all summer long, practically, still continuing to affect temperatures. It's been a weird, weird year. And now two small hurricanes out in the Pacific. Very weird year. Obviously Hawaii getting impacted by a very weird year. So hurricanes in that area, who knows? Could be one big one or three little ones, or it's just a weird year. Anyway, oil is going to be on the top of everybody's mind. That's why I bring it up every single day, and have been bringing it up, is because it's really, really core. Truflation, on the other hand, is showing solid downturn today, but still right in that range, 2.3%. If the 2.3% holds, then next month's CPI and PPI numbers, certainly the CPI numbers at least, should be really looking good, because we would now have way over 60 days of the truflation numbers showing that direction. Good news in Lathropville, the mega factory in Lathrop, there was a drone flyover showing 200 megapacks, well, just under 200 megapacks on the ground, sitting there ready to go. That is over $400 million worth of packs sitting on the ground. Hat tip to met God in the wilderness, at Met God in the Wilderness, who has a YouTube channel and does drone flyovers over Lathrop. Very, very interesting. Remember, this is recession-proof business, which is growing dramatically. Now, here's a good one. Liz Everett Chrisberg, head of the Bank of America Institute, says on CNBC, she's optimistic. All income levels have plenty of cushion in their checking and savings accounts through 2024 under every scenario that they played out. Do you hear that? People have so much money in their checking and savings account, and not just the rich, not just the poor, not just the middle class, everybody has plenty of money in their savings and in their checking account compared to pre-pandemic, lots and lots of cash. And they tried out various scenarios of how things might be going forward with regard to inflation, with regard to jobs, with regard to the economy. And she says they have plenty of money going through end of 2024. So that is really, really good news. That she says she's optimistic. She says that income is also up in every quadrant of the economy. So that's super good news. Well, as noted above, bond yields might be headed up due to way too much supply of treasury bonds being added to the system. Not sure if this flushes out in a day or two, or if this could be a canary in the gold mine, or a canary in the coal mine, so to speak, a canary in the bond mine. Anyway, people have been talking about a debt crisis for years. I can't tell you how long ago I began reading articles about the debt crisis, and it doesn't seem to come. But the federal government is out of control in spending, and the feds are going to need to step in to help this situation. Even if inflation is not under control, even if, assumingly jobs are not going to be falling apart, the Fed's probably going to have to lighten up on this interest rate thing just to help the bond market, the treasuries, be able to sell enough bonds. And then you might get this out of completely, as you've had for over a year now, this completely out of joint inversion. This may all be due, at least in part, not all, but at least heavily due to this government spending and the need for the government to fill its coffers with treasury auctions. Meanwhile, Joe Manchin might be switching parties, at least in part due to the out of control spending, which is potentially taking us in this direction. The huge surprise on the deficit. The U.S. July federal budget deficit at 221, which was about what it was the month before and was not expected to repeat, was expected to be around 91. Around 109, rather. I'm sorry, I got that number right. So the federal budget deficit at 1.6 trillion in the first 10 months of fiscal year 2023, more than double what it was in the year ago period. All right, let's go on to Elon Musk. He says his MRI indicates his old injury is fine, but that his shoulder blade, one of them, is scraping against his ribs. I don't know about that. I didn't do any research on that, requiring minor surgery and a couple of months recovery. But then the fight will be on, and it will be in Rome with all proceeds to veterans. So we're 2 or 3 months out from that. Super interesting. It's hard to imagine that the board of directors of his various companies and Zuck's companies and the insurance companies are going to allow this to go forward, but we will see what we will see. Mercedes sold 11,927 electric vehicles in Q2. That's up 608% from the second quarter of last year. Obviously, they didn't sell many last year, so the 608% doesn't really mean anything. After EV sales in the U.S. climbed 251% to 7,341 units, Mercedes now has sold a total of 19,000 vehicles through the first half of 2023. Look, that's not very many, but the trend is good. We're looking for a lot of these legacy automotive companies and the startups to do well. Some of them are doing well, and some of them not so well. We will be talking more and more about this because in order to get to the end of the ice age by 2027, a bunch of these folks have got to start doing better. Well, where to today? Well, I've been contending for 3 weeks, I think, maybe 4 weeks, that Tesla is detached from the other index and is charting its own course based on its own fundamentals and its own narrative. That does not mean it is immune to macro sentiment and macro trends and macro narratives. And so the macro right now is not good. And Tesla for the last couple of days has been really going along with the market. It's been going along more or less all the markets have been moving together and all of the stocks have been moving together. But of course, Tesla always moves a little more in any given direction. If it's up, Tesla's more up. If it's down, Tesla's more down. The market is pretty unlikely to recover today. And of course, yesterday I said the market would stay up, and a confusing day out of nowhere. And then we figured out why it did go down and end barely up yesterday. So I'm still going to go out on a limb and say the market will stay down today. Unless there's news, and there could be news. There's lots of possible news. I mean, like for instance, for Tesla, lots of activity all of a sudden in GigaMex and Giga Nevada, and that might portend major announcements at any time. We could be having a ribbon cutting next week in Mexico. We could be having a significant statement about plans in Nevada. All kinds of things could happen. And by the way, the PPI news was not that bad, but the market mood has shifted with the Moody's and the Finch downgrades. And now with this light take on the bond auction, the focus might now shift to U.S. debt and the ability of the market to fund that debt without interest rates cuts, which are not typical in not typical in a typical market. So the higher rates will starve equities of money. And then oil is another issue that is weighing heavily. I know that I'm not filled with optimism this morning, but at least for today, I think the market is not going to be that optimistic. Lots of things could change by next week, but right now it's going to be not that great. And Tesla probably is going to be sticking right to the market trend. So as of right now, we are down under 240 on Tesla at 239.72. The Dow Jones and the Nasdaq are down. Everything is down. Pretty much all of the Majestic 7 are down. Actually, interestingly, a couple of Cathie Wood stocks are up. Let's take a look at the rest of the information here. We have bonds. We have the crypto still trading on the mid 29s. We have the dollar looking like it's gaining just a little bit. We have gold down again, worst week in 7. The strong dollar is forcing the gold down, but the strong dollar should also be forcing oil down, but oil is up almost at 83 again. And the bonds, of course, at 4, the 10-year at 4.14, not as high as it was, but still very high. The 2-month still up, the 2-year up very strongly. Yeah, probably not going to be a great day overall for anybody. By the way, the LK99 story is very much alive. More news this morning. I suggest if you're interested, go to take a look at nextbigfuture.com. Not sure if we'll do an update later today. I've got to talk to Brian to see if the news is important enough to provide a reason to do a video on it. But if you're interested, you might take a look, because Brian is definitely at the very forefront of updates with regard to all of the LK99 story. All right. I know you didn't like this morning's show. Hit like anyway. It helps the algorithm. Also hit subscribe. Why haven't you subscribed yet? Why haven't you joined Patreon yet? Are you getting $5 a month worth of value out of this show? I can tell you there's stuff up on Patreon alone that's worth $5 to you right now. And you get a free audio that's worth $15 just for joining. So please join Patreon, hit notify, because to get the Larry Goldberg deal on Friday morning alone, maybe you want to turn off notify after Larry Goldberg is done. But man, that show is going to be, you're going to be very surprised at what we're going to talk about on Saturday morning. I can promise you. All right, that's all I got for you. Hopefully, maybe I'm wrong, or maybe there's news that changes everything today. But for now, looking like a rough day. It's been great talking to you.